Welcome to Agoracom Small Cap TV. I'm George Cholis, founder of Agoracom. Welcome you all back to another great edition of Agoracom Small Cap TV, where Alan, Barry, and I talk about the state of the small cap market and putting our money where our mouth is by making actual picks to try and see if we can perform based on our thesis. With us today, in addition to Alan, is Chris Taylor. He's CEO of Great Bear Resources, amongst other companies. Chris, say hello to everyone.
Hello, everyone. Nice to see you all here in the web broadcast format again.
And as always, our chief market commentator, Alan Barry Laboucan. Alan, say hello to the gang.
Hello, everybody, and I guess I should use more than one of my titles today. In addition to being the chief market commentator at Agoracom, I'm also a special advisor to Great Bear Resources, and so I'm kind of going to have the table turned on me for the first half of the show, where George is going to ask Chris and I some questions about Great Bear, and then we'll move on to some market commentary and also some picks. So stay tuned, and I think we'll have a great show today.
Nope, and that's what we're here to talk about. Alan, all kidding aside, congratulations on being appointed special advisor to Great Bear. That happened on March 18th, so just recently. I'm going to read the headline that went along with this press release. It was Great Bear partners with Osisko. I mean, that's big. On Lac Pao, and Chris, you'll correct me in a bit, but Lac Pao Gold Project in Quebec. So first, Chris, give me the high notes here on Great Bear. Obviously, more than you just thinking it's a great company, you've got Osisko there partnering with you. What is it that you're telling the world about Great Bear, and what is it about Osisko that made them jump into this partnership?
Well, Osisko offers us a combination of having a highly qualified technical team, a bunch of guys that really know what they're doing geologically, and they know what they're doing in the markets. It's a group that's been responsible for some major discoveries like the Éléonore deposit in Quebec, and the head of Virginia Gold Mines, which recently merged with Osisko, is Andre Gaumond. We've met him several times recently. Real prince of a guy, very strong business ethic. And the team that he's assembled in that company, it's probably the best quality technical data that I've ever seen put together. And Alan, you've looked at that data too. You could really back me up on that one. I've been very impressed with the work that they've done. So
before we go to the data, give us a snapshot of where's Great Bear right now. What stage of development are you in? For everyone at home who's just hearing about the story for the first time, let's hear. For what I'd like to go through is what stage you at. What can everyone expect next 6 to 12 months as to what you're going to do, and then the role that Alan's going to play along with you. But where are you at right now?
Well, the project that we put into the company, it's called Lac Pao. It's in central Quebec, so it's the James Bay lowland region. The area is highly prospective for mineralization, gold mineralization in this case. The project that we've put into the company has many of the same characteristics that led Virginia Gold Mines to discover the Éléonore deposit. So it's the same team of guys, and they found very similar geological markers that indicate that a very significant gold system may be present on the project. And that may be, I should probably rephrase that, we can say certainly that it is there now, because the amount of work that they've done, they've drilled off many kilometers of this big 12 square kilometer gold in bedrock, gold in tills, and geophysical target that they've got defined. And these guys are certain that they're going to discover a big mineralized system on this project. So the Great Bear is going to be, instead of going out there and trying to find a project and trying to do all the initial work on it ourselves, we've got one of the best qualified teams of people in the industry that have already gone out and made that discovery. We're getting involved at this point so we can facilitate their ongoing development of the project, and obviously we, through that process, earn a 50% stake in the project.
All right, so Alan, break this down for our audience. You know how they like to hear things. Break it down to more of a layman's terms here. What is that really excited you about the company and the project that made you accept this appointment as special advisor? Tell everyone at home who don't have the geological background what they should be looking at.
Okay, well, you know how this all transpired, George, is I've known Andre Gumon for since before he made the Eleanor discovery. And a few years ago, I approached Andre and I said, Andre, you know, sometime in the near future, I'm going to be looking at trying to put something together, a gold exploration company in Quebec. And Andre said, well, if you ever want to come in Quebec, you make sure and get a hold of me. So around 6 months ago, Chris, myself, and our project geologist Bob Singh decided that we were ready to start to do something in Quebec. We got a hold of Andre, and we looked at a package of various different projects. What drew us to this project is a combination of things, George. One is that it's right beside a road. It's in very close proximity to power, and it has an extremely large geophysical anomaly on it. As Chris mentioned, it's 12 square kilometers. And along that 12 square kilometer, the anomaly actually, I don't know if you've ever looked at it, Chris, but it actually to me looks like a bit of a horseshoe.
Yeah, I
And,
think happy face, Alan, a giant happy face.
well, I think there's so much luck in it that it's more like a horseshoe. Anyways, all joking aside, so this large horseshoe, George, if you will, although they've done a lot of work, relative to the size of it, there's still a lot of it that's underexplored. But the thing is, everywhere they explored along this anomaly, they found gold. Not just gold at the surface, but gold in their drill holes. Now, the partner that was on this project in the past that spent about $6 million on the project, they were looking for a big tonnage, low-grade discovery. But where they were drilling, they actually intersected a very high-grade hole, 110 grams over a few meters, if my memory serves me correctly, Chris. Maybe you remember it better than I do. But if you look at that in context to where the drilling was, it's like this hole is just sitting there on its own and it hasn't had any follow-up drilling around it or underneath it.
Now, why is that though? Why not? You think that's the first thing the company would have done?
Let's say you drill a grid that's like a football field, George, and if one corner of the end zone you find a high-grade hole, when you're really looking for the football field, you're going to sort of stick to the football field and kind of ignore that big hole in the end zone, right? And so that is unexplored around that big high-grade intersection. Then there's another portion of the project that has had very little drilling, but good surface sampling results that looks a lot like Eleanor, like Chris had mentioned. So we've got a few key areas. What we wanted to go in on this project and do, George, was to focus instead of the low-grade, high tonnage, which really needs better than $1,500 an ounce gold, we wanted to instead focus on the high-grade stuff, which potentially, if we were to find something, you know, even with gold at around 1,200 or better, should make sense if we're lucky. So that's sort of the nuts and bolts of how things transpired.
Chris, what's it going to take financially to get to the next stage now and figure out what you've really got there? Because that's always the biggest concern in this environment, raising money. But we're going to talk about that because I called for this big melt-up. I made the call right before PDAC and did it on the show here as well. So it's very timely, this partnership with the Cisco. But playing devil's advocate for a minute, because this isn't supposed to be a love, and I'm supposed to put you guys a bit of a test. What's it going to take financially? And can you get that money? And can you do it without diluting yourself out too much? And tell us about that.
Well, we're looking at a pretty tight share structure on the company right now, George. We've got about 18 million shares out, right? So we're very mindful of keeping the dilution under control. The terms of the agreement that we set with Osisko pretty much match what we expect to need to spend in order to really cross those thresholds on development of the project. And just to quote it off here, we're going to have it's about $4 million of exploration expenditures over the next 5 years to earn our 50%. After that money is spent, and remember, the key factor, like Alan said here on this project, is it's right on the road. So you're not looking at something where we have to helicopter around through mountains off in the middle of God knows where in the back 40. This is something that you can easily drive to. There's a camp that's already built on the project. I mean, Virginia Gold Mines and Osisko are not Mickey Mouse companies. These are billion-dollar companies. They knew what they were doing. So we get on the back of that work, and it's going to be very cost-effective for us to explore this project. So what we need to do is go after these targets that Alan was discussing, these high-grade gold targets. Those are very interesting to us because unlike, say, 4 years ago, 5 years ago, when everybody was happy with the, say you wanted a few hundred meters of half a gram to a gram of gold. I mean, this project has the capacity to produce that, but more importantly to us, it has the capacity, as we see in some of the historic drill results, to produce gold that's in the hundreds of grams range, or certainly that 50-gram plus range, certainly the capacity for hundreds of grams. That's what we're really interested in here, because that's going to be what's cost effective to develop in this area, right? So really what we've got on the option terms, they want 1 million shares of our company over the life of the earn-in. That's it, 1 million shares, and $4 million of expenditures. And that's it. We're not looking at a kind of deal that we're going to have to issue, 50 million shares to earn in. We're not looking at something where we have cash that's being spent on just option payments to the vendors. This group wants to see the money go into the ground. We want to see the money go into the ground. That way we emerge.
And I think also, Chris, it's worth mentioning also that, generally when a junior explorer like Great Bear gets involved with a big company like an Osisko Royalties, the terms are usually pretty tough on the junior. In this case, going back to Andre being a wonderful gentleman, we did a very fair deal, and we were treated very fairly as a junior exploration company, and that helps when it comes to your dilution down the road.
What does this deal say, guys, about the fact that, let's face it, the last 2-3 years have been absolutely brutal in the space. Companies couldn't find money. Companies couldn't find partners. Nobody wanted to touch a lot of any, or some, if not any, of the small cap resource companies. So what does this say in the context of things we've been seeing over the last month and a half now, that you finally get, in addition to other events that have happened, you get someone like Osisko saying, all right, we're willing to do a 50% earn-in deal here with a company of this size. We're going to give them a chance to show us what they got. Is there a change? Is there a change going on out there right now where confidence is starting to come back into the likes of Great Bear and the other survivors who have made it through and have proven that they've got the management teams, that they've got some expertise? Or is this just you had a great relationship with Andre Gaumont, and hey, it's lucky to have the fairy godfather in Quebec working with you?
I think all three of us have an opinion on that, George. So you've made some comments on it recently, George. So why don't we let Chris have a shot at it first, and then I'll sort of give my perspective, and you can have a shot at it as well, George.
Yeah, sure. My 2 cents, it's pretty simple. It's like you said, the companies that are actively engaged in this type of work right now, the list has gotten very short from what it was about 4 or 5 years ago, right? So groups like Osisko in this case, it's wonderful that we have, or Alan had an existing relationship with Andre, but it's also reflective of the fact a little company like Great Bear, we never could have got this deal back in the boom times, because there would have been competition from other groups that would have been able to attract that kind of activity. So right now, because we've stuck our necks up and we've shown that we want to be active in this market, these kind of opportunities are presenting themselves. I mean, Alan, you follow a lot of companies as well. I think that kind of fits with what I'm seeing, but what do you see?
Well, yeah, Chris, you bring up a really good point there, and I agree with you. I think that when you said that we were willing to put our hands up while everybody else is ducking for cover, George, And I think that that's one thing that's in our favor. Chris and I have worked together now. This is our second company. We did it recently with Dunedin Ventures on the diamond side, and now we've done it with Great Bear Resources. And I think that the way we've done it, George, it also says something about the structural issues with the industry. I agree with Chris that it's a tough market out there right now, and if you're able to put your hand up and get things done in this market, it's a chance for you to really solidify a brand or a reputation in the business. But secondly, I think we have some structural problems in the junior space, and the way we've done it starts to alleviate some of that problem. We've gone out and we've been able to get, in the case of Dunedin Ventures, a really good diamond project to put into what was basically a shell, and now we've done a similar thing. Now, in the case of Great Bear also has a couple other interesting projects as well, but there wasn't a lot going on with those from a market perspective, and now we've been able to get a really good project and put it into that. So both of these companies have good projects with share structures that haven't been blown up. And I think that there's a lot of money out there, George, to be deployed, but the problem is that there's a lot of companies that still have blown up share structures. So I think if you get good quality projects and you have the right share structure, I think there's a good chance to get funded these days.
Well, 18 million shares out ballpark at roughly 6 to 8 cents. People can do the math at home. That's almost that's a ridiculous market cap at the end of the day, which is why I made this call on this. I'm expecting a huge market melt-up, with the exception of any kind of global macro event that may take place. Not that it's going to, but that's the only exception to this rule. Otherwise, I'm seeing some big things starting to happen in the business. And I think companies like Great Bear, look, today I'm going to read this headline: Noront Resources to acquire Cliffs chromite properties in the Ring of Fire. In order to get that done, Franco-Nevada loaned the company $22.5 million for a 5-year period. Mm-hmm. Finally, what's happened is you guys partnering with Osisko, Noront Resources getting Franco-Nevada to loan them the money. The money's, everyone said, okay, things are cheap. Either we make a move now or let's all go home and sell gadgets or whatever the case is, because we shouldn't be in this space. So I see a real opportunity when I see deals like yours. I see deals like this today with Nora and others that have happened that say the survivors, tight share structures, reasonable projects. Quebec, very mining friendly. Ring of Fire, Northern Ontario, where it doesn't require, as Chris said earlier, flying helicopters into the middle of nowhere and fuel and camps, all those kind of things. This is the time, guys. This is the time where to look at your stock, and I can say this because you're not a client or like that, and I'm not conflicted. But you do the math: 18 million shares at 7 cents. Mm-hmm. You're talking a market cap that's under $2 million. It can't get any cheaper. Doesn't guarantee that it's going to get higher, but it can't get any cheaper. So if you're an investor, this is the time that you make these moves, right? And that's what I'm very, very happy to see the news you guys put out. Very happy to see the news that came out of Noront today and all that. So I think this is all part of a bigger picture where we're going to see a lot more of these things start to happen. And so good on you guys.
You know, we've been talking about that the last few shows, George, and as you were just mentioning that, I saw a similarity there. You talked about how the Franco-Nevada put the money up for Noront to buy the position. We're in a situation where we were able to do and they're a royalty company. Mm-hmm. We were able to do a deal with the royalty company. You see the trend I'm starting to see there is that the majors or the big companies are starting to look for that expertise in the smaller companies, and maybe there's a shift to starting to fund some of those. What do you think, Chris?
I think these guys have a smart and long-term view of the market, right? They have the ability to say, look, how long have we been bouncing along the bottom here with junior resource companies? If they have a tight share structure, a reasonable technical team, and they want to cooperate on our projects, why would we not take a bet on getting these companies going and getting active at this time? You know, the further we go into this slump, the less slump there is ahead of us, right? So eventually you do come out of this kind of cycle.
And again, I'll do the math that take a company like you guys, you're under $2 million. So just getting you to a $20 million market cap in the next 3 years, which is not outrageous. It's not as if we're saying you may be $1 billion market cap. $20 million, even $20 million, quite frankly, is a joke for a lot of companies out there. That's a 10x return. So this is my thesis. I was scratching my head between November and January, maybe October and January, where I was talking to everybody in the industry. I might have even talked on the show a number of times, or saying, why is the big money not stepping up? This is it. We have hit capitulation. The dead guys are dead. The survivors are here, and they're cheap. And I was scratching my head, banging the table, and quite frankly, it was pissing me off a little bit, right? But I guess during that period, because I had that market feel, these guys must have started saying, okay, we're ready to go as well, and they're just taking a look around for the opportunity. So obviously negotiations like this one with Osisko for you guys must have been taking place. I don't think it happened quickly over a napkin somewhere.
That's right.
So obviously that's happening. So again, we'll end it on that note as far as this segment goes. That good on you guys on this project. Good on you guys getting the partnership, and now let's look to see where you're able to take it over the next 12 to 18 couple of years.
George, by the way, you know, when we started this show a couple of years ago, our whole goal was to try and find companies that are leaders that are out there building in tough times, and we wanted to highlight them on the show. I'm glad we've been able to highlight a couple that I'm involved with, but I like this format, and I think we've got to do this more often, George. Get some executives from these exploration companies that we follow so closely and have a chat like this. I like hearing from industry guys as to what they see happening. Chris is pretty sharp on what goes on with, he keeps an eye on the market. That's why he and I have sort of been attracted to work together. We're seeing similar trends. And, there's a lot of good people out there, George, friends of mine in the business. We've got to get more of these guys on to do this kind of stuff.
Well, they finally have something to talk about. Let's face it, 3, 4, 5 months ago, it was tough to get guys on, right? Even when we had IDM Mining on, he had great things to say, but he didn't have a lot to say because there wasn't a lot going on. It's kind of exacerbated, could see the brighter picture, knew that the future is going to be better, but it's a case of when. And sometimes those conversations can get a little bit almost stale, right? But now we've got real things to talk about, like,
exactly.
For example, in this situation. So based on that, let's start talking about some other things going on out there. Like in today's news in the Ring of Fire, that was really, really big. Chris, when you hear about things like that, when you hear that Franco-Nevada is stepping up to loan another small cap junior with stock was trading at 36 cents before the news came out. So again, very small, very tiny, and all that. What does that tell you about what's going to be going on? Are these just anomalies? Should we not be getting too excited? Should based on your experience, how should we be reading all these events that we've been seeing over the last 5-6 weeks?
Well, what's the term? What's the nautical term? A sea change? I mean, what happens when you've been stuck on your ship in the middle of the Atlantic for 3 months or something, waiting for the wind to pick up? Finally, you see the first flutter of activity in the sails, and you're going places. I mean, that's a stupid metaphor to use, but would you have seen deals like this, be consummated a year ago? Very, very few, right? So it's what we're
4 months ago. I don't think you could have seen it. Forget about a year ago.
Guys like us in this side of the junior resource space, I mean, we live in the trenches in a sense. Like you could ask, a typical B-suited analyst or whoever it is that you want to talk to, but I agree with what you're proposing here. Like, talk to the guys like me that are out there with our finger on the pulse of the market. This is where we live. It's not like a part-time occupation. It's not something we do when it's convenient for us. We're lifers. This is our game. This is what what we enjoy, and this is what we're committed to. So it's been a very difficult few years, but these indications of activity that's what we've been waiting to see for a long time. And companies like GARS, we don't want to pat ourselves on the back, but you have to get active when the opportunity begins to present itself, eh? So that's what we're focused on here.
Are you sensing a change also on the street when you talk to bankers, brokers, people in the financiers? Are you sensing any change? Has their attitude changed towards looking for deals? Because I know in Agoracom we put out data that showed that it was the worst year last year. We all know it was the worst year last year for venture small cap com, especially the resource guys.
Yeah.
And yet we saw our number of visits and page views stay almost the same, but the amount of time they're spending on the site and some of the page views all are starting to increase, which told me, hey, this is the worst that's happening, and yet these metrics are on the rise, and that told me people are starting to look really seriously now about, they're not abandoning. If things are terrible, they say, forget it, I'm not going to Agoracom, I'm not watching that show, whatever the case is. But
yeah, they're looking at buying, right? Like you could. In my feeling is that a lot of the times when people are ready to make a purchase, they go in and they start really doing their homework. They do their research. So we get more calls now than we did in the recent past. I'm talking to more analysts that are interested in getting involved in the resource space again. Depends on the commodity, right? I mean, I've talked about this with Alan a lot. We've exchanged a lot of words, but certain things are appealing to investors right now. Certain things are not. We found in our experience.
You want to give us a short list? What is, what's not, a top 3 on either side?
Well, I'd say the top 2 that I would look at now would be I would look at diamond projects. That's obviously where we've put our activity, and because gold has had such a bad rap for so long, it's beginning to get a bit more of a shine to it as well. Now, the base metal story, zinc, has been something that I followed for a few years, and I think there's a few good zinc stories out there that could be looked at in detail as well. So,
for us, Chris?
What's that?
Do you have one of those zinc stories? That's a space I don't follow a lot.
Yeah, there's, I'd look at, what is it, it's Canada Zinc. There's a couple of companies that are called the same thing. I should basically crack out my list. I remember last year, 2013 to 2014, I ran a bit of a portfolio, and some of the things that we invested in were zinc and diamond stories and a few gold stocks, and I think we made about, it was about a 40 to 45% return in that time frame, right in that portfolio. And that focus hasn't really changed. Those commodities are still things that would attract good value investment, right? And I mean, Alan, God, at PDAC, how many people did we talk to when we were working the floor? And they were kind of telling us the same thing that we were thinking, right?
Well,
on a lot
part of that is because of my outrageous handsomeness. They all wanted to come talk to us.
I think I'm going to throw up. Where's that waste paper basket? Oh, jeez.
A lot of people thought you were in the witness protection program. You had this fake beard and mustache and hair. So when they walk up at the PDAC, start tugging on it, saying, "Jesus, it's real." This guy's not part of the witness protection program. He actually chooses to look this way. But no, that's great. See, Chris, that's great. And zinc, I can tell you guys just offhand, by the way, I know one thing about it is there's a lot of zinc supply drying up. There are a lot of mines, zinc mines that are literally drying up, and new sources are going to be are necessary. So you should see. I haven't looked at it, but you should see the price of zinc either on the rise or starting to rise.
Yeah, that's right.
For that reason.
George, you want to go through a few quick picks and then wrap her up?
Yep. Let's talk about things out there that are new. I want to bring up Urban Barn Foods. Okay, this is a client of ours that we announced a couple of days ago, actually on Friday. They're trading on the stock symbol URBF in the U.S. So it's they're fully reporting. Guys, I think this is. I haven't said this in a long time, but this has the potential to be the biggest game changer we've had in 10 years. This is a company that does vertical/cubic farming, which means all of their vegetation, fruits, vegetables, all the things are grown indoors in a controlled environment. No GMOs, no pesticides. They use 6% of the water that you would normally use to grow those exact same products. 320 square feet of space will yield them the same amount of product as 3 acres on a farm.
Wow.
And more than just lip service, because it sounds like a great idea, right? But to me, commercial acceptance is a big deal. I've got to see. Everyone thinks they have something great, like you guys now. You've got a Cisco partnering there, so obviously there's a third party telling you we think we got something here, or no one's going to waste their time. Well, in this case, you've got Dundee Agriculture that owns 40% of the company right now. I mean, that a lot of times, if they own 40%, who am I or anybody out there to say otherwise? And then you've got tier 1 customers like Sobeys, Fairmont, the Fairmont Hotel chain, the Ritz-Carlton, that are buying these products right now. I was in their facility on Thursday. Okay, you've got to go to Agoracom, start watch these videos, but the lettuce and just the lettuce alone didn't even look. You've never seen lettuce like this.
Did you taste it, George?
It looked like a flower because it was outside.
Did you taste the food they were growing?
We did, because basil, I tried the lettuce. I'm not kidding you guys. Right off the line, it just explodes in your mouth. And I've got clips of the executive chef.
I actually did some homework on that company a while back, and I was pretty impressed. I mean, the Fairmont Hotel in Vancouver is a high-quality restaurant, and that is one of the places that they're using the food, the stuff that's grown at Urban Farm out here in Langley, where I live in British Columbia. And so, having such it's quite interesting to me. I was really wanted to see if there was a difference in the taste, if it was more flavorful or.
It was. The difference is it explodes. It's because you got to remember, when all of our so much of our vegetables and fruits and vegetables are transported from California and Mexico. Yeah, a lot of it's locally grown, but a lot of the big chain restaurants, a lot of the big chain retailers truck this stuff in. Well, when it's trucked in over 10 or 12 days, it gets tired. Vegetables are living things. They get tired, so they lose their nutrients, they lose their taste. By the time you get it, you can lose up to 70-80% of all the things you expect coming out of it. These things are literally grown. Sobeys says we want them grown to this size. Once they get to that size, they're harvested right off the machines, boxed, and sent to Sobeys. That's unbelievable, right? So,
well, George, that water use figure that you quoted, that's incredible, because water is one of the biggest issues in the U.S. with agriculture, right? So everybody's looking at ways to save water.
Well, California, guys, if you haven't seen this, right, and this all has transpired. I got a call from Urban Barns last week when they said, George, we want to bring you in. We want you to help get us this deal out there and tell everybody about it and fly into Montreal for us. So I did. But just recently, NASA came out and said California's got a year of water left. 1 year of water left right now. Then I saw a headline on Wednesday night, ironically enough, the night before I was going to Montreal to see Urban Barns, to see for myself.
Oh, by the way, George, before you go into that point, 80% of the water use in California comes from agriculture.
Yeah, well, listen to this. So I saw this headline on Wednesday night. Farmers in Northern California, a lot of them, we're not talking about 1 or 2 guys, a big portion of them are not going to plant crops and do their normal farming. They're just going to sell their water to farmers in Southern California. Yeah. I mean, what does that tell you? This is not a futuristic one day, 40 years from now, we may deplete the water table. This is happening right now. Well, it doesn't take a genius to figure out that Urban Barns is probably getting some calls from big farmers out there who are saying to themselves, we may not have enough water. We need another solution. Well, and so the timing couldn't be better.
Speaking of that, George, do you have any idea on how quickly the company can go from concept to building to having food into the system, wherever they are building a modularized...
Yeah, so if you get a customer that says, hey, we need one of these barns, they call them a barn, it's inside of a big building, right? But they call it a barn. Inside the barns are the machines. And those can cost, upwards of $20 to $25 million, which sounds like a lot, but it's not for the people in that business, and not for what it yields at the end of the day. Assuming you got all the approvals from a local, because anytime you build an industrial building, you got to get electrical and plans, all those things approved, which isn't a big deal, but it takes time, right?
Especially if you're going into an area where they're in need of this kind of, like if you went into California right now, I bet you it's not nearly as long to get permits as somewhere else in the States.
Nevada. So I would think once you get that, to build one of these facilities, 6 to 8 months, and then you start seeding. Within 4 weeks, you've got your first round of products coming off the line.
And then it continues consistently after that.
And then it just goes 24/7, 365, and it's amazing. 6% of the water. So this is potentially one of the biggest game changers I've ever read. And I don't say that lightly, because every company says they're a game changer. They don't say it. I'm saying it. So Urban Barns Foods, URBF. Go to Agoracom, take a look at the profile page, take a look at some of the videos, and see for yourself what these guys have going on. Let's go into some stock picks.
Okay.
So let me bring up the little table here, and I'm going to.
While you're doing that, George, I just want to make it clear again where we transitioned last show, and what I'm trying to do now. In the last show, I sort of put together what I'm going to call my model portfolio. So until you hear from me, these are companies that I see a trend developing in gold and oil that I think you can buy the dips and sell into the rallies, and I think that trend will reward you quite handsomely in the near term. And so the last show I picked a few companies in the commodity space that I think will benefit from that. And I've got one gold, one diamond, and one oil company to talk about today, George.
All right, well, let's start with Dow Radiant. DNA on the big board TSX, closed at 95 cents. 50-day average volume, 573,000 shares. Fantastic liquidity. You know that's very important to me with what I'm trying to get accomplished when I look at investments. You've picked this a number of times. Everyone's new to the show. You picked this all the way from 40 cents, somewhere around there, when I was berating you because there's a 40 cents and number of shares traded a day was 6,000 shares. So I was berating you on that. But there it is on the right-hand side. So for everyone to look at there in this chart, you can see you can see that's the 1-year chart. Let me go to the 2-year chart because it's last year somewhere in this level here, where Alan started calling it here, where he kept on pounding the table, pounding the table the whole way, and pretty much. If you take a look there, in early March, it hit a multi-year high, or at least an 18-month high, when it went into the $1.15 range, and it's held pretty steadily. So, what's your call on Dow Radiant there, and what you see going forward?
Well, originally why I started following the company, George, was because they made some really nice hits with their drilling on a project in Ireland, of all places. And I also kind of like the symbol DNA. It's nice and easy for me to remember. But the drilling is what's impressed me right from the first holes. That's when I started covering it on the show, George. And now it's getting some big acceptance. Ross Beatty just bought 10% of the company right around where it's trading right now. Ross is a very smart guy. He's made a lot of money over the years. He knows what he's doing, and this is a high-grade discovery, George. And in this kind of gold environment, I think that these are the ones that are going to keep people's attention. Having guys like Ross Beatty on board, I think, helps out. And I'm comfortable, even though it's trading near its all-time high. I'm still very comfortable to feature this company and put it in my model.
And Alan, when did Ross take that 10%? When did he make that investment? And then once you answer that, Chris, I want to kick it over to you and tell me again, what does that tell you when finally you got the Ross Beatty of this world? He could have had this at 40, 45, 50 cents. Just going back, I'm looking down my screen here, so pardon my turn away, but in November you could have had this at 50.
He could, especially if he was watching our show, George.
Especially if he was watching our show. It cost him millions. It cost him millions not to be watching. So I'm pretty sure Ross saying, "Damn it, I'm tuning in." But
Yeah, it's
When
just
did that happen? And then,
George,
Chris, what do you think of the developments like
it
that?
was just in the last few weeks that he bought his position.
There you
Yeah,
go,
well,
Chris. What's your feedback on that?
there's enough upside left there that I think the difference between buying at 50 cents and trying to do a real bottom basement bargain trolling event and buying it at current levels and building the infrastructure up for real growth. I mean, if you're a major investor like Beatty, I mean, why is that so significant to you? You're not out there for the small gains in the stock. You're out there to make significant long-term wins, right? So I don't think the difference between the 50-cent level and the dollar level is going to kill you. That just shows again more support for improving sentiment with these kind of deals.
Yeah, George. Actually, Ross has done this on about 3 or 4 deals lately. So, getting back to your earlier point about a sea change, I think is valid.
Alan, could you do this for the benefit of everyone? I don't mind put you on the spot. Maybe over the next couple of days, just maybe a bullet point post on your blog or on our blog. It'd be really great if you could summarize those kind of events that have taken place over the last 6 to 7 weeks. The
sure.
Ross Beatty investments, this deal between Great Bear and Osisko, the Franco-Nevada there with Noron. It would be great to kind of start tracking these just so we can show everyone rather than just say it. Say, here you go to Alan's blog, go to the Agoracom blog, there it is, take a look at the events, and we just keep adding to it. So would you be able to do that in the next couple of days?
Yeah, let's get that done, for sure, George.
Yeah, I think that's really important for everyone to see. But Chris, I agree. Guys like Ross Beatty aren't flipping quarters and nickels here.
That's right.
So I would think someone making this investment here over the next 5 years wants to make 3 to 7x or whatever the case is, and they see it now. And hey, they're doing their due diligence. It doesn't mean that he's going to get it right. It doesn't mean it's a guaranteed win. None of us are making any kind of recommendation. But at the end of the day, all you can do is your due diligence. And when the likes of Osisko are doing it for you, the likes of Ross Beatty are doing it for you, the likes of Franco-Nevada are doing it for you, because people don't part with their money in projects very easily. These aren't stupid people. They're not corporations that don't know what they're doing. You've got to almost follow them out. You got to follow them, I think, and take your picks there.
People sell for a lot of reasons, George. They only buy for one reason.
That's exactly it. It's one of the best sayings in the history of man. And what Alan means by that, sometimes people have to sell because of taxes. Sometimes they're building a house. Sometimes they've got special finance requirements, or whatever the case is. Those, they don't necessarily sell because things are bad. They may have other scenarios, but you only buy for one reason. You're never forced to buy anything. You're buying because you like, and that's great to see. North Arrow Minerals is next for you. NAR on the Venture Exchange closed at 79 cents today. 42,000 shares on average. Traded 17,000 shares today. There's the chart right over here. Let me do a 1 year. So it looks like it's gone back to levels it was last year. A lot of dips. A lot of great volatility. This is great if you're a trader. Alan, is it a trader, or is there something you're seeing out of North Arrow that's going to,
No, George. This is another candidate.
Process?
This is another candidate of those low-volume traders that are kind of sleepy stocks that I always introduce you. You get mad at me and you say they're not liquid enough, and then eventually they turn liquid. Well, the reason Dalradian eventually turned liquid as well was because they made good discoveries with their drill holes. The reason I like North Arrow is that, one, I'm very bullish on diamonds. That's why Chris and I are building Dunedin Ventures, is that's focused on diamonds. I'm very bullish on the price of diamonds based on long-term supply and demand trends. North Arrow has an excellent team involved, and they have very good projects in a few different spots that I'm watching in Canada. And I think that the work that they're doing in those few different projects gives them catalyst potential to move to the upside. And if you look at their stock in the last 6 months or so, George, I'm starting to see a trend that I really like, higher highs and higher lows.
Yeah. And that's a project. One of the issues in diamonds, I'm sure, Alan, you've talked about this, and I'm probably just, what do they call it, beating a dead horse, but one of the main producers of colored diamonds is the Argyle mine in Australia, right? And that's a mine that is not going to be producing any diamonds within a few years. So you have a project like, and forgive me, I can never pronounce the thing properly, but it's North Arrows project up in the Melville Peninsula of Nunavut. That thing has a lot of yellow diamonds in it. So as the supply at the Argyle mine goes offline within the next few years, projects like that have colored stones are going to be that much more appealing to the diamond supply chain. So that's something I'm sure you've commented on before, Alan?
I've talked a lot about the supply chain, Chris, and you know what? That's not just what's happening in the colored stones. We're seeing that happen, and that's sort of my long-term argument for diamonds. We're seeing it in the clear stones as well. There's just not enough new production. There's not enough new discoveries. So anywhere in the world where you get a potential source of those kind of things, you really got to, in the industry, got to roll up our sleeves and pay attention, because if the supply is not there and people keep wanting it into the future, the price can only go in one direction.
And I'll tell you what's also got my attention is you can see my crosshairs on the right-hand side of the screen there. That was the recent high that it made on March the 4th or so, somewhere in there, and that high cleared the the other peaks that were hit in 2014, and that goes right back to you haven't seen that since mid 2012. Well, that tells me a lot from a technical point of view that we're starting to get into new territory here, and you might want to set some downside protection. Stocks at 79 cents, and you've got the 9-day moving average at 73. So I might protect myself and make sure it doesn't get too far below that, maybe 71 or something. But otherwise, it's starting to break into new air here, new territory that hasn't seen a long time, and stocks like that. They keep breathing in that air. They keep going higher. So that looks like a good choice from a technical point of view on a longer term, not necessarily as a short-term trader. And finally, Bankrest Petroleum here. BNK on the big board TSX closed 281 today. Liquidity not a problem here whatsoever. Million shares, typically trades 1.7 million shares. Let's look at the 1-year chart. Take a look at that. You're bottom feeding here pretty well. You're getting this really let's go back to June. You're looking at $7 stock. Now, price of oil was significantly different, so don't expect that to happen anytime soon. But if you got a bit of a long-term horizon here, seeing this get back into the $4 range based on oil, and if you haven't tuned into a show before, I'm going to quickly give you my oil outside of typical technicals, which is, when the Republicans had control of the White House, it was no coincidence that oil made its way over 150, 60 bucks. A lot of that driven by, whether you like it or not, but this is the way the world works, a lot of that driven by need to fill the coffers of their biggest supporters, and things like that just happen, need to fill the coffers of their friends in the Middle East. And no coincidence that when the Democrats are in control and they're looking for oil alternatives, you get oil dive down to the $45 mark, because that supports, that weakens their political adversaries at a time when they're going to be fundraising. Everyone's going to be fundraising, and you want to weaken your adversaries. B, they need to get tough on Russia. This helps. C, they look at the Saudis and say, hey, you bask in glory at 160 bucks a barrel. We need our foreign diplomacy objectives to be assisted by you guys here, and ISIS needs to make less money. So I'm thinking, once you hear Jeb Bush, bottom line, here's a trigger. Once you hear Jeb Bush say, I'm running for president, you can bank on oil getting back into the $65 to $75 range, I would say, by the first quarter of next year at the latest, if not sooner. But look for oil to recover, and it's not going back up to 100 bucks, not yet, but 70, 75 bucks, I think that's definitely in the cards in the next 9 to 12 months. So, Al, if that happens, where does Bankrest Petroleum go?
Well, my argument for oil is a little bit different, George. I again break it down into supply and demand. when you have oil trading at below $80, you have it trading at below the average cost of producing it throughout the world. So when you have it under $50, it's almost 50% from what the average cost of producing it is. And the longer that it stays at that level, regardless of who's trying to get in or pay anybody off or supporters this or supporters that, the longer that it stays below the average cost of production means the higher it's going to go on the other side. And so I'm trying to position myself for what happens on the other side. And a company like a Bankers Petroleum, I think you've seen a double bottom recently, and I believe that that is a strong indicator that it's ready to start going in the other direction. The other thing is, I think that the U.S. dollar has been the main reason that's been pushing down the price of gold, oil, and other commodities. It's been on an unprecedented move since the summertime. I think that that parabolic move is nearing an end, and once it ends, the price of a lot of commodities are going to go up, including oil, and I want to have some good companies to take advantage of that. I added 2 last show. I'm adding Bankers Petroleum now.
All right. All right. So let me take off the screen share here. Great job, guys. As always, great information. That's the power of this thing at the end of the day. That we've got some pretty smart people. I guess I got to say Alan's pretty smart. At the same time, got people like Chris who not only are smart, but they've got their finger on the pulse of what's happening out there. And what that provides to everyone watching the show is just that edge that you can't get anywhere else. So I want to thank both of you guys again for joining us today. And Chris, continued success. I'm sure we're going to have you. We had you on for Dunedin. Now we've had you on for Great Bear. So hopefully you have more for us in the next 3 to 6 months to have you back on here.
Well, thanks a lot, George. We're going to have a lot of updates as we progress through our project, so I'll be happy to talk there. I could offer one stock pick of my own as well, just based on past performance. Look up a company called Nano One, and it's run by a fellow named Paul Matizik. So Paul used to be my boss on.
You have a stock symbol? You have a stock symbol by any chance?
I'm going to have to crack open my other screen, but if you guys can look at it, look up Nano One. And Paul's the guy responsible for Potash One. He had his uranium deals as well, and like the guy has been a real powerhouse. So the name is Paul Matizik, and the company name is Nano One. I attended there.
Is one spelled O-N-E or with a 1? I'm looking. Oh, there it is right there. N-N-O on the Venture Exchange. Found it.
Yeah, NNO. Have a look at that. I attended their AGM meeting about a month and a half ago. It's a technology deal essentially where they use various nanotech to boost a bunch of other industrial applications. So it's not specifically related to batteries. It's not specifically related to any one thing. It's going to be broadly usable in a number of tech spaces, and I have a great deal of trust for the management. So please have a look at that one.
Let me bring up the chart so you can just explain, maybe share something here with everybody if you don't mind.
Yeah, no problem.
Let me bring it up. All right, you see it there?
Yep.
So just looking, so it looks like it was halted for a long time. Did it just do a reverse transaction or something like that, where it got vended in? That this is an old company had something else going on, and they vended in Nano One?
Yeah, I believe it was a Minex company that they have. It might have been Dunderave Resources, if I remember correctly. That was run by Paul Matizik. We had a joint venture with them at one point on a mineral property. I believe it got halted, and they announced this sort of, I'm not sure what the deal structure was, if it was an RTO or any other type of merger. But I attended a talk by their CEO, who's essentially a chief technical officer for the company as well. And it seems to me like if you want a broad-based pick for something that's going to have a lot of different technological applications. They're at the stage of development, and this is my understanding with a lot of these similar deals. They've gone past the test tube sort of testing phase. I know in the battery space, a lot of the companies, if they're working with lithium batteries or other things, they make enormous investment decisions when they're based on just they have a little bit of a test tube stage of progress. They can show that a certain chemical reaction or whatever whatever it is, functions at a couple of grams of material scale. These guys here are developing technology at the bench scale, and that means they can produce kilograms of this nanotech material, which is useful in all these other applications. And that means they're very close in the long run to be able to getting to that industrial scale of operation. So this is a group that I really like. They're more advanced than some competitors would typically be in this kind of space, and the management team under Paul Matizek has an excellent track record. So I think it would be worth your time just having a look at that one.
And everyone, you can see this. So it looks like the completion of the business combination just happened on March the 9th. There's the closing of financing. Nano One Materials announces completion of business combination with Perfect Lithium Corp. That happened on March the 9th. So they acquired 100% of the shares of Perfect Lithium. You can go everyone can go read the press release, but the bottom line is it looks like that's when this started anew here, and you can see just by trading over the last over the last couple of weeks that it's a fairly new story. So thanks for bringing that up, Chris. That's actually awesome because we're discovering something new. Hey, maybe you can have Paul Matizek come on next week.
Yeah, that's right. He'd probably be interested in talking, and certainly I met the new CEO of that company. He's somebody that would be very interested in talking to either yourself or Alan. I think he'd tell a very good story.
Well, let's get him on the show.
Right, no problem.
All right, so, hey, thanks, Chris. We gave you not the last word, but the last pick, and it's always great to have someone on the inside, give everyone, and I'm going to make, by the way, we got to do our full disclosure here. The companies we talked about, let me just turn off the phone there, guys.
Here, I'll do mine first, George. As on the disclosure, I've talked about Dunedin Ventures. I've talked about Great Bear. I'm a special advisor to both of those companies. The other companies that I picked, I don't have any disclosure on, George.
Right. Urban Barns, Gorcom provides IR services. We just did that on Friday, and I didn't, and that wasn't a pick. That was just talking about it, but. Remember, everyone at home, and obviously Chris is with Great Bear and with Dunedin. Maybe you're a shareholder of Nano. You may, how about this? Chris may or may not be a shareholder of Nano One. So for everyone at home, remember, do your own due diligence. There are no buy recommendations here. This is strictly us providing our insight, help you start your due diligence where you're going to look. Don't make any purchases or any transaction of any kind based on what we say here. Talk to your financial advisor. Talk to your spouse, your partner. And because your risk tolerances are significantly different from ours, but the idea here is to provide you with good companies to start looking at for your own research at home. So, guys, thanks for joining us. Awesome show. Really appreciate it, and we'll see you all next time.
Okay, thank you, George.
Thanks a lot, George. We'll talk to you soon. Everybody have a great day.